to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark.
Welcome back to another Weekly Spark. I am Ryan, and I'm with Jason again this week. Jason, how are you?
Man, I am doing great so far, but it is early, so we'll see how it goes.
It is early. Let's get right to it, see what happens. All right, so first off, we've got equity boom. Buyers are missing it. What do we got behind this one?
Yeah, so I think this is an important topic for agents because, why this matters is even in a high rate environment, which we've seen, over the last year or so, thankfully they're coming down now, but homeowners have built record levels of equity. And many renters don't really realize how much wealth they're missing out on while they're waiting for these rates to drop. So one thing I want to mention is we've seen some inflation creep up, pretty rapidly, but inflation actually benefits homeowners over time because guess what else goes up? Your house, right? So you're going to be building equity. And that's why we've seen such a huge amount of equity that's built up. And some real examples of showing how home equity grows, like even when rates are higher. So I'm going to share my screen and just show you, because realtors, I know that, our buyers are emotional, and I like to show them data to let them know, hey, this is a good time to buy, even in the last year. And we've seen some crazy things over years. So this is called the Housing Price Index. And this basically shows changes in single family home values over the last year. And so nationally, even though we hear a lot of fear on TV, right, Ryan, the doom and gloom, like the sky is falling, that sort of thing, nationally, we still have a close to 3% appreciation. And 20% above national average, you'll see these states in green. I'm in Alabama, we're seeing about a 3% rate. Florida, we've seen a little bit of adjustment to the downturn. But if I go to quarterly, look at how many more states are above the national average. So we are seeing some nice appreciation. And remember, guys, once the rates continue to be cut from the feds, we will see an inflection of money, and we will see more houses being purchased. So we will see some, I believe, a lot more increase of sales prices over the next 12 to 18 months.
Yeah, and one of the things that follows that up is we're sliding into the next one that we've called the inventory illusion. So kind of ties into what you just talked about there. Give me a little backstory on this one.
Yeah, listen, so low supply isn't always what it seems, right? Many buyers think that there's no homes available, but in reality, listings are just shifting categories. And Ryan, I know you've got a lot more information about the inventory issue. You've seen it in Florida. Tell us more about that.
Yeah, it's interesting that people are kind of calling for, 2008 level, catastrophe at this point. And it's just not true. There's roughly a 59% decline from pre-2008 inventory levels. We're nowhere near that. In early 2025, active U.S. home listings dropped about below 900,000, and really the long-term average is about 2.2 million. So there is, technically a shortage out there. Month supply looks like it's growing, but when you're growing from rock bottom, there's some good range in there to remain healthy. So with new homes, we're about 9.1 months supply. And really, for me, that feels like they're building above the median level home. And so people just can't afford to buy those homes. And that's why they're sitting. And we're noticing that with builders, they're actually coming off of the incentives because they don't have the profit margins that they've had in previous years. And so they're actually offering less incentives. Instead of dropping their price, they're trying to build that margin back in. We saw them increase all of these incentives to keep those purchase prices elevated in their neighborhoods. And now, instead of dropping prices, they're just cutting back on those incentives and pulling, getting more out of those homes. And then existing homes are at about a 4-month supply, which is up from about 3.2 months in the prior quarter. Really, again, a long-term balanced market is often about 6 months supply. So we're still on the short end of that. Obviously, it all kind of points to the markets that, you mentioned Florida being a 20% drop. A lot of Florida is a luxury market. And so we're seeing, the markets be kind of beat up at those higher level prices, which ultimately makes housing more affordable. But in those mid-range prices, we're just not seeing, like right now I could look in St. Pete and there's probably, 6 houses under 200,000 for sale. And it's just, they're just not available to find, and they all need complete rehab. So this is kind of where we are at with the pricing being elevated, and the inventory, while growing, is not showing problematic at this point. It's actually getting back to being healthy. So some good stuff there. Let's jump in. So obviously this one kind of leads into creating your own inventory, right? Like if you're not finding what you're looking for, tell us a little bit about the construction loans that we've got here at Creative First.
Yeah, so I'm glad you mentioned that before about the affordability, because it is still an issue, right? And one of the ways that you can combat this is to build your own home. So you can save a lot of money on construction loans. We do construction loans for you. We have a plethora of them. A matter of fact, if you're a VA, you can actually get a loan. You don't have to pay a payment for 12 months until your home is ready. But we have one-time construction loans available. We have loans to get you a loan if you own a piece of land that you want to build on, or if you don't have a piece of land, we can tie it all in together. So it's good to have this product for folks that just can't find what they want, but they know what they want.
Yeah, there's a lot of opportunity out there to go out and build what you want and create your own affordability for sure. So the last one, obviously, I'm going to come back to it. So this is AI for agents. And again, this is something we threw out there last week. This class will be invaluable for you. We're running it from October 27th through the 31st. It'll be every day for about a half an hour to an hour, depending on how much interaction there is on the class. But it's just great information to get yourself set up, put in the work up front, and then it will save you hours and hours and hours later on. And it is for the big time cost of $0. So again, the link for the sign up will be in the description for this, and let us know if you don't see it, and we can get it to you. And we're also going to start sending out some emails here within the next couple of days to everybody that we've got access to. So looking forward to running that class. So awesome, man. Well, Jason, thanks again. This is a good week of information. So thanks for that. And let us know if you got any questions. We'll see you on the next one.
That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.